Hello everybody, welcome back to the channel. Today's video I'm going to talk about how you can improve your win rate and even double it in some cases if you've got very low win rate at the moment. So if you don't know about trading, a win rate is basically, say I take 10 trades, I win 3, I lose 7, I've got a 30% win rate. This is a very important number or percentage which you need to know in your trading. It's good to actually work out if you are a profitable trader overall, because even if you have a 50% win rate, most traders only have a 50% win rate, and you can actually be profitable long term with a 50% win rate. Risk to reward ratio and win rate actually go together quite well. So if you have 50% win rate and you usually use a 1 to 2 risk to reward, then overall you're going to be profitable, because every time you're winning a trade, you're making twice the loss. So even if you say you take 10 trades, you lose 5, that's minus 5%. And if you win 5, that's plus 10%. So overall, you're positive by over 5%. So if you put these together, 50% win rate, 1 to 2 risk to reward, profitable overall 5% out of those 10 trades. If you obviously risk 1% per trade, which you should be doing anyway, or 1 to 2% depending on how risky and what pair you trade and stuff like that. All depends. But yeah, before we actually get into this video, make sure to subscribe. I think only about 25% of people that watch the channel are subscribed. So if you're not subscribed, I don't know what you're doing, but just go down and subscribe to the channel. The first thing I want to talk about in this video is only take trades which fits your trading plan. I see so many people just see that gold or whatever you're trading is dropping a bit, so they just enter a sell. Like, don't impulsively enter trades, because one, it can go against you very, very quickly. And the markets recently, with all the vaccine news, the election news, everything, they have been crazy. Gold made a 300 pip drop in like 1 minute this morning. Like, if you're on the wrong end of that, the account is going very, very badly overall, if you know what I mean. But yeah, you want to have a trading plan written down. So an example of this is on your plan, you could have enter a long position, which is a buy if people don't know. When price breaks this certain level, retests this Fibonacci level, creates a bullish engulfing. So you have set rules before you enter a trade. So if the trade fits those rules and you have multiple confluences, 3 to 4 confluences, then you can enter that trade. I talk about this in all my videos on my channel, having multiple confluences. In the last video, I did actually show an example of this on my analysis of that 260 pip gold trade. I had multiple confluences, I had a double bottom, I had a retest, and yeah. If you trade with multiple confluences, you'll see your win rate go up a massive amount. And it's helped me go up in my trading, progressing along the way, helped me make more money overall, help my people in my VIP that I offer to people that obviously want to learn more about trading. The second point I want to make is actually checking multiple time frames. New traders seem to just gravitate towards 15-minute, 30-minute, 5-minute charts, and this won't really help you unless you're scalping. But new traders, I'd advise daily and 4-hour to start with. What's the trend saying? Is it bullish? Is it bearish? And 4-hour, I say draw your zones out, like your key levels, your support, your resistance, all these sort of areas. Go down to the 1 hour and 30 minutes obviously for entries. You can go down to lower time frames to actually find an entry, but people just seem to think that higher the time frame, slower profits, or they won't be able to make as much money. But obviously this is not the case. The moves actually are bigger on the higher time frames because it's over a longer period of time. So if you catch one bullish candle on a 4-hour, it's obviously going to be more profitable than if you caught 1 or 2 bullish candles on a 15-minute. Because that whole 4-hour of trading is in that one candle. So if you manage to catch one of them, then it'll be a lot more profitable. Another thing that not many traders want to do, and I just say it's the best way to improve your trading, is actually to log or journal your trades and your trading experiences in the markets. A lot of traders do this for a short amount of time and aren't disciplined enough to carry on doing it. Say they make a loss or they lose 10%, 20% of their account, they don't want to be accountable for it, so they don't write it down in their journal. But if you want to improve seriously in trading and you don't want to just get rich quick like most people want to do, and as you know, trading is a long-term game, you have to improve, obviously. Otherwise you'll just be plateaued at one point just going along. But even if you go along, so you see that you need to wait for maybe one more confluence before entering, you could, instead of going like this, you go along, up, and then maybe plateau again. But obviously you're in that higher level now. It's just all about leveling up your trading, improving with everything over time. Because obviously no one starts out as a perfect trader, and everyone makes losses. I make losses. Obviously I don't make 100% win rate. No one does in trading. Like, it's inevitable. You're going to lose money. But yeah, what I'd usually do when I log my trades is actually take a screenshot before and after of the chart on TradingView. They've got a good capture feature where you can just save the image to your laptop, computer, whatever you actually chart on, and yeah, just write down why you entered the trade, the lot size, what happened, how big your stop loss was, how big your take profit was, and obviously after, when you put the after screenshot in, you can write down what happened. If it was a good trade, perfect. If it was a bad trade, what actually happened, what went wrong in the trade. Did you not wait for another confirmation? Did a news come out and you need to check the news next time before entering a trade? So those are different variables which go into entering each trade. So once you're aware of them and why you're losing, then it's easier to get better in the long run. And I'd personally say, whilst learning to trade, don't use real money at the start. People message me, how do I start at £10? How do I start at £20? I just don't think it's worth it. Unless you're a good trader already, like when I've done the £10 to £1,000 series, I'm up like 2,300% or something. Obviously I know how to trade. I haven't just gone in straight away and traded with £10. That's 100 pips on a 0.01. You can only lose 100 pips and your account is gone. But say you use a demo, let's say £500 on it. Obviously it's not real money, but the psychology isn't there, but you can learn the technicals and actually how to place trades, when to exit trades and stuff like that, which obviously is very, very important because people can do the analysis easily, but actually knowing how to make money for that analysis is a different ballgame. People just see blue or whatever colour your profit is, they just see profit, close straight away. But when they're in a loser, they let it run because they always think they're right. And if you're in this mentality in Forex that you're going to win all the time, you're going to double your account every week, then you're definitely doing the wrong thing. And you should just go get a job somewhere because Forex is not for you. Also, I'd recommend having a loss limit. So say you lose 2 trades in a day or 2 or 3 trades, then don't trade for the rest of that day or the next few days. Because when you're on a losing streak, you can be tempted to either put on a big lot size to get those losses back quickly, which obviously you could lose that trade as well and lose even more of your account. I've obviously gone through this in the past when I started Forex trading. I was always thinking I was right and using big lot sizes, over leveraging and stuff like that. And in the long run, it does not pay off. Trust me, I've been in this Forex for over a year now. Obviously I started quite young compared to most people. I was actually 16 when I started trading, so I've got an advantage on most people that start like mid-20s, 30, 40, whenever you start trading. But it's actually never too late. Anyone can get good at trading, but the fact is people don't want to learn. They don't want to put their hours in. They don't want to have the losses. They don't want to put months and months and months of learning in, maybe years of learning, to actually become profitable in the markets. They just want to follow signals and in a week they'll double their account. But that's not going to happen. No signals will be able to double your account whilst using correct risk management in a week. In my chat, we had about 300 pips last week, but I'm not just a signals chat. I send analysis, everything detailed analysis. That's the main thing you need. And if you start doing that for your own trades, detailed analysis, maybe put it on like it's a spreadsheet or something, link to before the trade, link to after the trade on a screenshot or something like that, and then obviously you can see what happened in that trade. And that's what I do. I have a spreadsheet of all my trades I take, all my trades, all my accounts. I have a journal as well which I write in about that trading day, what happened, what news came out, what was affected in the markets and stuff like that. It's just great to have a log of that and you can look back on it and improve in the long run. But yeah, I hope this video helps some of you in your trading, and obviously if you did enjoy, like and subscribe, smash that like button if you did enjoy, and I'll see you in the next Forex video.